Ah,
All right.
all righty. Let me make this a little smaller. Cami, can you see my whole screen and all the other stuff, or just
Yep,
my
we see
window?
we see your screen and everything. Just go ahead and go with it like it is, please.
Great. Well, good morning, everybody. Thank you very much for taking the time to be with us today. I am excited to have such an excellent panel of experts, superstars in my book, that are going to help us talk about the secrets to lowering taxes through real estate. There are some really unique and just fantastic ways for people to do this. And what I want to do, first of all, to get started without too much ado, I want to introduce our first speaker, Cami Baker. Cami is a force to be reckoned with in the world of real estate philanthropy. She is the CEO of Real Agents of Change, also known as The Rock, spelled RAOC, which is a group of dedicated realtors and professionals who espouse the idea of donating real estate assets to nonprofits. She has been a champion real estate agent and now works to help realtors and professionals become visionary, heart centered, successful professionals who are ready to be the champion that their causes, their company, and their communities deserve. May I introduce this morning Cami Baker.
Well, thank you so much, John. I am going to share my screen, friends, and I'm going to share with you how and why donating real estate is a win-win-win for the donors that donate real estate, for the nonprofits that can 6 times their donations from the donors they already have, and also for the professionals that are bringing the attention of this. So I'm going to bang through this about 5 minutes, and I want to encourage any of you to attend our charitable real estate masterclass for free as my guest next week, and I'll put that in the chat in just a moment. So here we go. So what charitable gifting of real estate is, Rick Peck is going to get into that a little bit more in a bit. He's the philanthropy guy. What I want to share are why it is a win for all the people that are involved. So here's why donating real estate is a win for the property donor. Now, when someone donates real estate to a 501c3, they pay no capital gains on that which they donate. They also can write off the appraised value as the basis for their tax deduction. In the master class, we get into the difference between selling the property and then stroking a check to the nonprofit world versus donating it first, and why there are so many reasons to donate first. And it gives these donors the ability to give smarter. You see, cash in this country is only 3% of the wealth. Whether someone makes 20,000 or 20 million a year, 3% or less is in their pocket change. But 43% of our wealth is held in real estate. And this is why, with all the baby boomers and all the people that are liquidating their assets right now, this is a good time for them to give smarter. And of course, they're wanting to leave that legacy, and they don't have to wait till they die, friends. They can do this right this red hot minute and see the fruit of their labor go into good use. Now, the nonprofits can 6 times their annuities, their giving from the donors they already have. Dr. James wrote the foreword for our book, Real Estate is Hot, Fundraising is Not, and his research has proven this time and time again. The Nature Conservancy is a nonprofit that's been accepting gifts of real estate for decades, and they are talking about how those same donors on that donor list can give 3 to 7 times more. Matt over at the university says the same kind of a thing. When you've got a way to shift what the donor is giving from cash to something like real estate, it's an easy way to bring in more donations without doing some extensive, lengthy campaign to go try to find new donors. Now, for those of us who are real estate agents, there is a full commission here. So when a property is donated, we have a simple system that makes this risk-free and no money out of pocket for the nonprofits. And because we are helping to handle the transaction, we guarantee a full commission. So we want our realtor friends to know, just because people are giving property away and just because this is benefiting the nonprofit world by $9 billion a year, we don't want you to do it for free. We don't want a donation. We want to pay you what you're worth. Now I'm going to share a screen in just a minute that shows exactly why this is a business development tool. This is how all advisors, from realtors to CPAs to financial advisors, can attract 87% of the marketplace, because people want to do business with those who are heart-centered and doing the right thing. So what we're saying here with donated real estate is that all the for-profit people who are involved can make money while helping others make a difference. This is not about looking for cash donations. This is about putting money in our pocket to actually help others that are in need. And just going to show you this slide. I'm thrilled to send you this slide if you would like to actually look at it for yourself a little bit later. But what this slide is telling us is consumers, customers, and clients have spoken. They want to do business with companies, products, and service providers that are on purpose, that are socially responsible. And when it comes to gifts of real estate, instead of picking one nonprofit, veterans, animals, university, etc., a community can support all the hundreds and thousands of nonprofits in their community by doing an awareness campaign that every single one of them can benefit from gifts of real estate. So this is where you can get a copy, a free copy, a digital download of the book, Real Estate is Hot, Fundraising is Not. I'll put this in the chat along with the link to come to the masterclass for free as our guest. Back to you, John.
Thank you very much, Cami. Let me see what we're doing here. I want to real quickly go through and share my screen and go through what we're going to talk about today with Cami here. What we're going to do today is talk about how real estate is ever changing, and real estate realtors and investors either must adapt or die in this marketplace. And the knowledge that we're going to impart today can be a strategic advantage. As Cami said, whether you're a real estate agent, a CPA, a financial planner, a guru, whatever, this knowledge will help you be more effective with your clients and help them have an advantage in the marketplace. Today, you're going to learn from some of the best in the business. We have Rick Peck, Mr. Philanthropy, with us. We have Mike Bursey from Mill Creek Commercial, and you have all heard Cami Baker, the CEO of Real Agents of Change. What you're going to learn today is what you've already learned from Cami, why real estate and other donations are a win-win-win for your clients. I'm going to talk briefly about how companies have major donations in the form of hard assets that they can donate for tax breaks. Rick Peck is going to talk about the 5 types of real estate donations. And then Mike Bursey will wrap up with the difference between various 1031 exchanges and some other tax strategies that he is intimately familiar with. So with that being said, what I'd like to do is at this time introduce Rick Peck. Rick is an independent philanthropy advisor with Richard C. Peck Consulting and is about to unveil the Philanthropy Guy, which is a comprehensive charitable giving resource hub. For the past 6 years, Rick has led the New Hampshire Charitable Foundation's philanthropy and donation services team, overseeing all aspects of development, donor engagement, and donor services. He served at Dartmouth Hitchcock Health and the Geisel School of Medicine at Dartmouth College as the Director of Individual Giving and Gift Planning. And he served Dartmouth College as an Associate Director of Gift Planning. Rick is a certified financial planner, a charter advisor in philanthropy, and a chartered financial consultant. He holds an MBA from Baker College in Michigan and a BA from the University of Massachusetts. And most recently, Rick is the incoming president of the board of directors for the International Association of Advisors in Philanthropy, also known as AIP. Rick and his wife Claudette live in Concord, New Hampshire, and it gives me great pleasure to introduce Rick Peck today.
Thank you very much, John. I appreciate that. I'm going to share my screen right now. We'll jump right in. And so let me know if all of you can see it when I blow it up here. Right. Tell me if you can all see this. Thumbs up.
Looks
maybe?
good.
All right, here we go then. Okay, so as John said, I am going to give you a short primer on the real estate giving options that you might have. John mentioned 5. I'm actually going to give you a bonus. I'm going to give you a quick 6, and I have about 10 minutes. So it's 11:22 Eastern where I am. So hopefully we'll end right on time at 11:32. So here we go. There's just a little bit about me. Again, John gave me a nice intro there, but those are my designations. That's my cell phone, and that's my email address if you have any questions after this. And that's me. All right, so ways to donate property. We're going to move through these. First is an outright gift. We'll talk about that in just a second. A bargain sale is another way to donate real estate. A retained life estate is another way. Something called a flip trust is a 4th way. A fractional interest gift is a 5th way. And then as a bonus, I'm going to give you something called a conservation easement gift. So those last 2 are less common, but I just thought I would throw those in the mix. All right. So an outright gift, here we go. It's a donation of the entire property. So you take the whole piece of real estate and you just donate the whole thing. It's the most straightforward of all the different types of gifts that we're going to talk about. So the real estate, once received by the nonprofit or the entity receiving the real estate as like a 501c3 entity, for example, they take that real estate, they sell it immediately, and the net proceeds are applied per the donor's wishes. So that's the transaction. It is best for individuals or couples looking for the highest income tax deduction possible by making a real estate donation. So that's that. So it could be a $500,000 home, $1 million piece of property that might meet commercial real estate, could be some raw land. Again, it's donating the whole thing. One thing I didn't mention as part of this presentation is there's a whole series of things you'll want the donors to do, such as getting a qualified independent appraisal and other types of due diligence that work that the nonprofit would do in conjunction with a potential donor before accepting these gifts of real estate. What I'm showing you right now is this is the end product. If everything passes the test and everything is going smoothly, then this is what you see. So again, beyond the scope of today's presentation, I'm just giving you the down and dirty on the gifts themselves. All right, moving right along, bargain sale. So this is where the potential donor offers a piece of real estate to a nonprofit under the condition that the nonprofit pays a percentage of the real estate to the donor or the seller immediately, and the balance of it is donated to the nonprofit. And I'll show you what I'm talking about. In the case of a 50% bargain sale, using a $1 million piece of property, calling that the fair market value, $500,000 would be a donation to the institution, but the other $500,000 would be a payment to the donor or the seller immediately upon acceptance of the property. So they're basically selling it to us at a bargain. They're selling it to the nonprofit at a bargain, and the rest of it goes in the form of a gift. So the nonprofit then markets the property, sells it, and gets its $500,000 back that it paid to the donor, as well as the balance of the proceeds in the form of a donation. So that's the way that works. We were entertaining one where I am now. It was actually a testamentary bargain sale of some condominiums that the donor wanted to give only upon her death or her incapacity. So, but it's an attractive thing for those who want to take care of the people they leave behind or take care of themselves in some financial capacity, but also make a sizable gift. Okay, again, excellent for individuals wanting cash right away without having the burden of selling the property. That's on the entity, the nonprofit. or the entity that's receiving it. Retained life estate. So the potential donor profile looks like this: an individual or couple with no children and no mortgage on their home. So they deed this property to the nonprofit, but the donors then maintain the property as they always have. They pay the property taxes, they take care of the property, they pay the utilities, they pay the insurance. It's like they never left. It's like they never made the donation. It's like they never deeded it, but they did. And they get a tax deduction for doing that. But again, they're good tenants is what they are. They're good tenants for the rest of their lives. So after the passing of the final survivor, the property is then officially transferred within months, very quickly, to the nonprofit. And the property is sold and the net proceeds applied as the donor wishes. You can see that as the theme there. Now moving on to the fourth type of real estate gift, flip trust. The real estate is donated into a charitable remainder net income trust, which means the property is probably, in many cases, not generating income. So it's put into this trust and it just sits there. The property, again, usually distributes no income, or if it does receive income, as if it's like rental income, then it's coming in through this charitable remainder net income trust. So then the property is sold and the net income trust flips to a standard unit trust. And at that point, it's invested in a diversified portfolio. The real estate is gone. Now the cash is put into a diversified portfolio and it pays 5 to 7% of the trust corpus out, usually on a quarterly basis, for a set period of time or for a lifetime. So it's perfect for individuals, couples, or children wanting or needing quarterly income for a set period of time or for a lifetime, and they don't want the property. And again, beyond the scope of today's discussion, somebody could also take that and put it into a deferred charitable gift annuity. And the reason for doing that is now it's going to be a fixed payment quarterly for the rest of their lives, for the rest of the lives of the donors or whoever they're setting up as the annuitant. So again, you're taking an illiquid asset, you're turning it into an income stream, and on the back end, it becomes a charitable gift. All right. So now we're into fractional interest. Here, the property owner would donate an undivided interest in the property to the charity, and it generates a charitable income tax deduction for doing so. The charity and the donor would then, as co-owners, jointly market the property. So they're doing it together. And in some cases, the donor would be delighted to let the nonprofit assume the lead role in marketing. In other cases, the donor may want to stay very much involved. Either way, both owners sign the listing agreement and they're in it together. When a buyer is found, a purchase agreement is executed by the parties, and at closing, the donor and the charity emerge with their respective portions of the net sale proceeds. So here's an example. In a hypothetical case, when the donor is keeping 25% of the sale proceeds and the nonprofit's receiving 75%, the property sells, for example, at $1 million. And then after broker fees, legal costs, closing, it's $920,000. So taking 25% of that $920,000, the donor gets $230,000 and the charity gets the rest, the other 75%, at $690,000 in cash. So that can work really well too. Again, just being that it's like a joint effort. And last but not least, the conservation easement. So here's an example of that. A donor owned 224 acres in the Monadnock region of New Hampshire and hoped that most of that would never be developed. The land was a conservation priority for the town, and the donor had a range of philanthropic interests and sought to donate portions of the land to the New Hampshire Charitable Foundation, the town itself, and the Monadnock Conservancy. So very much a conservation-oriented person. So they donated 90 acres to the town, 134-acre conservation easement to the Monadnock Conservancy, and 134 acres to the New Hampshire Charitable Foundation, now protected from development. So net proceeds from the sale funded 3 separate donor advised funds, 3 separate ways to give. So that was nice. And all potential capital gains were avoided, and it was eligible for 3 separate charitable tax deductions for the easement, for the land donated to the town, and for the land donated to the New Hampshire Charitable Foundation. It was a slam dunk. So one more time, just as a recap, keeping myself right on the mark as far as time goes. Outright gift, most straightforward way to give. giving the whole thing. Bargain sale, you're giving a portion of it, portion of the real estate as a donation and keeping the balance as a sale, a discounted sale. Retained life estate, great for people who are living in a home their whole lives, no mortgage, no kids, and want to donate the property, but they're still using it while they're alive. A flip trust, taking a liquid property, putting it into a trust that allows a quarterly income stream and a way to dispose of the property at the very end after people are finished receiving their income. Then at the end, the trust terminates and the proceeds go for charitable purposes. Fractional interest, again, they were in it together. One party receives a portion of the property and the other property receives the balance of that, as demonstrated in the illustration. And then the conservation easement, where we looked at it as taking care of the land, but also getting a nice tax deduction and also creating a nice charitable contribution. And that's it. So I will not share my screen anymore, but if you have any questions, you're welcome to reach out to me. And let me undo the sharing here.
Thank you, Rick.
Welcome.
Wow. I want to make sure that everybody understands how knowledgeable Rick is in this area. And if you have any questions whatsoever about charitable gifts or real estate, I urge you to reach out to Rick and pick his brain. It's just overflowing with knowledge and information. And I'm always impressed every time I see Rick on the screen. I know we're going to get a lot of good information. That's why I was excited to have him on the screen today. Our next speaker, Mr. Mike Bursey. I want to introduce Mike. Mike is a senior commercial real estate advisor for Mill Creek Commercial Brokerage with expertise in 1031 exchanges, tenant in common ownership, and in commercial investments. His superior skills come from over 22 years in the commercial real estate space, also in financing, and as an REO asset manager for some of the largest banks in the USA. He has lived his life dedicated to helping others, and prior to his real estate career, his passion was as a community paramedic. Mike is happily married and is the father of 8 children. Holy mackerel, I'm surprised you still have any hair left at all, Mike. It is my pleasure to introduce Mike Bursey. Got to unmute yourself, Mike.
There we go. I didn't even know I did that. Well, thank you for that
Beautiful.
introduction. And I kind of feel bad following up behind Rick. That's kind of a way, I learned so much already. I feel bad I'm just got a couple minutes. So, well, thank you for that. So I've been in the commercial business for 20 years or so. And before that, like I said, when I had more hair, I was a paramedic. So I don't know which one cost me. I don't know which one cost what, but so we specialize in 1031 exchanges. Our company sells tenant in common properties, and we kind of get people out of the business of tenants and trash and toilets. But we're talking about 1031 exchanges. There's really 3 kinds of 1031 exchanges out there in the world. There's a simultaneous, oh my word, I'm having a problem today. I'm not even gonna say it. I can't speak today. So there's a simultaneous exchange. That's a rare one where you got that all those stars have to align to do that one. That's pretty rare. There's the reverse exchange where somebody has to where somebody finds a piece of property and is able to buy it per se without having sold their relinquished property. And that one, and when I see these 1031 exchanges, the real expert about this is finding a qualified intermediary. That's the real key. Before you even think about selling a piece of property, you got to find a qualified intermediary. They're the ones that the IRS allows for you to take care of your funds and go from there. That way you stay what they call in the safe harbor. We all kind of know what that is. But and then there's delayed exchange, which is the most common, and that's the one where somebody decides to, I need to sell my piece of property and I haven't quite found the property I want yet. And so the rules of the 1031 exchange, as we may all know, is that once you sell a piece of property and you're going to upgrade or whatever your idea of 1031 exchanging it for whatever reason you're selling your investment property, you have 45 days to identify a piece of property, and you have 180 days total to close on that piece of property to stay in the safe harbor. And like I said, the real expert on 1031 exchanges is finding that qualified intermediary out there. And I think a lot of us are familiar with 1031 exchanges a little bit. I could go hours and hours and hours of how these things really work and the do's and don'ts and what can go wrong. But it's really important to have a qualified intermediary. But I really wanted to talk about, and why do we do 1031 exchanges besides the donation? I love all that. I learned so much from you guys on that, is to defer your capital gains taxes and defer the deductions you may have been taken on your property over the many years, and whatever taxes the local state might decide that they want to bequeath on you for selling your property. So it's a great opportunity to pass along the wealth to your children or somebody else if you decide to do that and not cash out. Because we all know if you cash out at investment property without doing donations, things like that, the feds will end up taking 20 or 30% or more, which we try to avoid that. But I wanted to talk about the clientele, and we're going to have a really simple in-depth 1031 exchange in 2 days from our company. At millcreekcommercial.com, we have all sorts of resources about 1031 exchanges on our website, and all the different things you can do, hours and hours worth of podcasts and webinars, things like that you can listen to or read in the middle of the night. But I wanted to just give a quick information out there to those that are listening, that what are really the clients out there. And we talked about the baby boomers, and that's kind of where our clients are as well, that the 57% of all baby boomers own all second homes and vacation homes are owned by 57% are owned by baby boomers. And what I want to talk about is that if you have a baby boomer client that owns a home, half of them own an investment property. And depending on who you listen to, there's 10 to 17 trillion dollars of assets in investment property that will exchange hands in the next 20 years. 10,000 baby boomers retire every day. 5,000 of them pass away every day. So you're looking at the clientele that we deal with. There's 27 million investment homes, investment properties, anywhere from a single family rental to a fourplex that the baby boomers own. And I know that most baby boomers at some point don't want to be a landlord anymore, and they want to have the donation, want to donate it or have a reason to get rid of it, to get out of what we call the tenants, trash, and toilets business if they've owned it for 20 years or so. So the clientele, we just read a book in our company called The Million Next Door. The clientele is those baby boomers that have worked so hard over their whole lives, that have these investment properties, and maybe have land, and maybe land rich, cash poor, those kind of things we talk about. Those are the clients that we all need to be aware of, and they have questions and what do I do with this? I need the income, or I want to do this, but they don't have the answer to the question. So our goal, and I think all of our goals, are to serve them. And there's so many clients that every day we get people call in and say, I don't know what to do. I know that there's a problem. I know there's a tax problem. If I sell this, how do I do it? And I just wanted to reiterate that we all have, that there's so many people that may be willing to donate, so many people that need to upgrade or go passive income, but they just don't have the answer to their questions. And so that's kind of my spiel. We're sort of familiar with 1031 exchanges, but like I said, I could do hours and hours and hours, but I don't want to take up your time. But go to the website, our millcreekcommercial.com, look at our resource page. There's just tons of information about 1031 exchanges. And we always have on our company, once or twice a month, an expert that comes in, legal attorneys, IRS agents, things like that tell us how to stay out of trouble. So that's all I really wanted to pass along. And like I said, from you, I've learned so much from you guys that I'm going to make some calls and learn more from you directly after we get off this phone. So.
Excellent, Mike. Thank you so much for that. I know that we have just such a great panel of experts. As I said before, if you have any questions at all, feel free to reach out. You can leave your name or email in the chat if you want someone to reach out to you. and we'll make sure it gets sent to the right person and they can reach out and answer all the questions that you have. I want to personally thank Cami and Rick and Mike for taking the time to be here today and share their information. I know I learned more every time I'm with these people, and I hope it was informative for you as well. At this point, if you have any questions, feel free to put them in the chat. And thank you, Rick. That's the way to get a hold of Rick. If you want to get a hold of Rick, if Mike and Cami, you want to put your information in there, people will have it, and we can leave it up for a minute or two. But Kelly, did you have any questions you might want to ask? Good. I'm glad your speaker's on. You're muted. No, not yet. Yeah. You're not the only one that's had technical problems today, trust me. Well, good. If nobody else has any questions, I thank you very much for being here today. We hope to have an upgraded version of this presentation in the next couple of weeks and a lot fewer technical problems. But thank you for hanging in there and being with us today. I wish you all a great week.